Check the mic and make sure it sound right.
Hi, I'm DK Will. This is DK Will. Talk about it, and I'm going to talk about this filing by the Internal Revenue Service that was filed on August 29th of this year, and it was entitled The Gross Proceeds and Basis Reporting by Brokers and Determination of Amount Realized and Basis for Digital Asset Transactions. And for those of us, particularly the XRP Army and any of us who are involved in invested in some of these we'll say vital cryptocurrencies that are vital to the new monetary system that's being installed, it's going to pay for us to know this, because I'll try to make it undry. I'll try not to bore you to death like you see the folks on the screen there, but I do want you to see it as I read it, and maybe I'll find some images to liven it up a little bit while I'm speaking. But nonetheless, I'm just going to cover some key points because out of an 84-page document, we don't have 84 days to go over it. So the first 50-some pages are actually meat of the matter. The rest are like definitions and bibliography type information. However, there are some pieces of information that I think are critical for us to take into account and to continue on our quest to be prepared, at least from a financial perspective of our lives, to try to weather the storm. And I don't know if we're still in the storm. I think the storm's going to get worse. I don't know if the storm's behind us. But based on this, I know that change is coming. Now, is it going to be clouds opening up and we see the sun and the blue skies? I don't know. But I'll talk about it, and I'm sure as I talk about it, things will come to mind as well. So I'm going to go over some points of information that I've actually isolated that I want to discuss and try to tie it into where we are. I hope I don't bore you. But if you don't care about your money, who does? If you don't care about your investments, who does? If you don't care about taking care of your funds to the best interest of your family and your household, who does? Okay? So let's talk about it. And so as you see on the screen there's the actual filing, the PDF document that I downloaded from the .gov website, and it's proposed rules. I want you to keep that in mind as well, that these are proposed rules because they're trying to get a grip on this new technology of money, digital assets and fintech and things of that nature, and they're trying to fit it into the mold that they have, as well as consider new codifications and laws because it's a new, unique form of money. And so you can see what it says there. It's a gross proceeds and basis, like I mentioned to you. And the agency that did it, as I mentioned, is also the Internal Revenue Service, and it's a proposed rulemaking. And what it is, it's a filing for public comment. In other words, they filed this so that those involved can make public comment. And in general, quite honestly, when they say public, they do this all the time. How often have you ever been in one of these processes or hearings? Probably never. But I can assure you that the brokers are going to be, and that's what it's been about the whole time, is they want to get a grip on it so they can keep a track of you. They want to be able to tax the rich now because they know that the elite are losing their footing. And so as the regular folks like us find value in this new technology, they know there's just going to be new rich people who don't really know the rules, but they do want to take their piece of the pie. You better believe that. And you can see here in the summary, this document contains proposed regulations regarding information reporting and the determination of amount realized. That's how much you profit, and basis, that's how much you paid before your profit, and backup withholding, that's basically like taken from an IRA, and they are required to keep 20%. And if you're not a particular age, they can keep 20% plus a 10% penalty. So this is going to be vital information when it comes to this, and you notice it is addressed to the brokers, and the brokers are the ones who are primarily the ones who are going to be the public commenters on this. The brokers and the banks, you better believe it. And you can see here, commenters are strongly encouraged to submit public comments and submit electronic submissions via the federal e-rulemaking portal. Okay, are you a part of that portal? Me either. Okay, but so we see who's really involved here. But I can tell you this about issuing these type of proposed rules for public comment. Because as you can see here from regulations.gov, it gives you about the regulatory process. And that's the reason This will reveal to the audience, as it did to myself, that we're further along than you think. But it will also reveal how much time is going to be allowed for this process. And so we can literally look at a calendar, and we can actually read it as well in the document, but we can see where we are in this process, because you see it mentions here that there's a pre-rule stage. And that's stage number 1. It says point blank that an agency cannot issue a public rule unless granted authority to do so by law. Okay, so we can see where, Gary was kind of running ramshod. And I'm sure if I can find this out so quickly, he already knew it. He's been head of a different agency before this, okay? So he knew what he was doing. What's his motivation? What's his agenda? That's all up in the air for everyone to come up with their own ideas. But I bet you he and whoever his cohorts are know. But who are his cohorts? But in the point I'm making here is, you can see here's the proposed rule stage. And that's the stage we're in, the proposed rule stage. So we're in step 2. And then we end up at the final rule stage in step 3, which I'm going to cover in this video, even though I won't be able to cover the entire document. Like I mentioned, it's way too much. But here's what I do want to make sure we get out of this. Is that when you read these proposed rulemaking process, you can see the public comment period. Sorry for the dogs. I apologize for that. But they just ran outside. So I'll quiet down. I get numb to that sometimes, and I don't even realize it's happening. I'm downstairs in my cave. I guess you'd call it my cave. But nonetheless, you can see here it says that during this phase of the rulemaking process, agencies accept public comments via the regulations.gov. Some agencies all accept them, blah, blah, blah. In a typical case, an agency will allow 60 days for public comment. And returning to the document, we can see here in the summary in column 1, if we go down to dates, it says that they must be received by October 30th. Okay, so that is the timeline for this proposed rulemaking. And then pretty rapidly following that time period, it says a second public hearing date for this proposed regulation will be held on November 8th. So roughly a week or so later, it says a public hearing has been scheduled for November 7th, and then a second one on November 8th. So can we see that they're in a bit of a hurry? Now that's important that they're in a bit of a hurry, because as we go along, I'll try to tie it back in, like I said, to show you that we don't have as much time as we think. But before anything happens, folks, before any normal citizens make a pretty good amount of money, they're going to know who you are, where you are, and how much you got. That's it. They're going. You will have laws to follow, and this is a part of that process from the Internal Revenue Service. And so you can see there's a timeline for you, folks. Early November. They're going to hopefully be done with the hearing stage, and then, it's government. Sometimes they push things back. We'll see. I don't think they're going to push things back, because I think the BRICS nations are putting the squeeze on the USA to get it going, at least as part of the movie and the narrative. And so that's what's going on with this. We're in the second stage, and it even gives a background on digital assets and virtual currency. Okay, because keep in mind, the ruling with XRP is that it's not a security. So are we gonna call it now a digital asset, which is a property, or a digital currency, which is also something that's under the purview of the OCC? I mean, we don't know, but we can see that they do, and they're getting it all started. But it says here that digital assets, which is what Brad Garlinghouse often refers to XRP as, and it seems like, when he barks, whether they bark back or not, they tend to listen and follow through on where he's at. I don't know what, maybe he's a secret agent, but that's just another side. Let's get going. Digital assets are digital representations of value that use cryptography to secure transactions that are digitally recorded using distributed ledger technology on a distributed ledger, such as a blockchain or a similar technology. Virtual currency is defined here. as a digital representation of value that functions as a medium of exchange, a unit of account, or a store of value other than the US dollar or a foreign currency. And then they actually put in parentheses fiat currency. The notice provides that convertible virtual currency, that is virtual currency that has an equivalent value in real currency or that acts as a substitute for real currency, is treated as property for federal income tax purposes. Now that affects, all of us whenever we buy and sell. And if you can recall, there was a time when your tax returns when they said, do you own virtual currency? I can go back 2 or 3 years they asked that question. You said yes or no, and that was the end of it. That was the end of it. They didn't have, you didn't have any other requirements. But the requirements began to increase because then Uphold started sending out 1098s. And then they all started following the KYC and trying to get the information on you, which we will see this covers. But we can see here on the second page that it is described as property and currency, not securities. Okay. Wake up. You still there? You still there? All right, let's keep going. Okay, good. I'm glad you're still here. Now we're going to move on to the next page and cover just some brief information. There's a lot of information, folks, and I wish I could cover it all, but I'm going to cover what matters. Not what matters, but what I think is beneficial, and that matters. Okay, moving on. All right, so we can see here the application of existing information and reporting rules to virtual currency. Okay, this is where, like I said, they're trying to fit it in. The application of existing information reporting rules, and it applies applicable to Ripple because they use it to pay wages too. And you can see here, this provides guidance on the application of current information when reporting requirements when virtual currency is used to pay wages. So we're talking about wage and tax statements and things of that nature, as opposed to 1098s and 1099 avenues. But as we go down here, what's critical in this portion, without becoming boring, is this right here. It says section 102, 1012 of the code provides that the basis of property is the cost of the property. And I'm going to hold that for a minute. That means what you paid for your crypto plus any fees. Okay, to make it simple. It says the existing regulations under section 1012 provide special rules regarding the calculation of basis for certain types of properties. Now that's talking like real estate. You can depreciate properties and things of that nature. And so can you apply that to cryptocurrencies? I doubt it, but that's an example of a special type of rule, and that's why the next sentence. These regulations do not expressly address the calculation of basis for digital currencies. Ergo, the request for public comment on how we're going to handle this. Because having been briefly a part of the financial world and earning my Series 7 and beginning the Series 66, but not wanting to be under such scrutiny, I see that that's the reason it is under such scrutiny, and you are under the purview of the SEC, FINRA, which is, just a self-directed organization, but nonetheless, for years after you even stop, because they want to know where the money is and where it's going. I mean, without getting too off topic, but you can see here it talks about that $600. Remember that Biden mentioned? Section 604 of the code requires any person who, in the course of a trade or basis, makes payments of $600 or more that are deemed to be fixed or determined income to file information returns and furnish statements to the payee. That's an obligation on the part of the broker, the payer, to furnish these statements to the payee. Okay, so that's why they are asking for public comment. Moving on, let's see what I got here. I got page 4. That's this one here, column 1. What did I have out of column 1? Okay, here it talks about under section 604 includes shares of corporate stock, notes, bonds, debentures, and other evidence of indebtedness. Okay, that doesn't apply. Commodities, contracts, or derivatives with respect to commodities. That doesn't apply. Section 604 5A, the code generally requires applicable persons who transfer securities that are covered securities in the hands of these applicable persons to a broker. So that doesn't apply. And so you can see right here, this is why I did it. Okay, so it says prior to amendments made by the Infrastructure Act. Now remember that because it's coming back. Remember that because it's coming back. Okay, did not address the extent to which these requirements apply to transfers of digital assets. So you can see now, here's evidence of the need to come up with something instead of trying to fit it into something. And that's what this does, and that's why it's so important, because it could come in on us pretty quickly, just like the hearings follow the closure of the public comment period pretty quickly. And like I mentioned before, I will touch on that. But before I touch on that, notice here, which can apply to many of us. You see here it talks about section 6045E requires real estate reporting persons to file information returns and furnish payee statements, including the seller's name, address, and gross proceeds paid to the seller, and other information as the security may require by forms and regulations with respect to certain real estate transactions, like your HUD form when you settle a property on real estate. However, here's where the laws have to address this, and again, a reason for public comment, because this section here said that real estate being sold if the seller's principal residence and the full amount of the gain in sale or exchange of the principal residence is excluded from gross income, which generally permits individuals to exclude from gross income gain up to $250,000, and if married, up to $500,000 on the sale of a property in exchange of principal residence if certain conditions are met. Now see, what I just read there was a loophole, folks, with real estate. I'll talk about that a little more as I continue reading, because this is going to be long, but I'm going to hurry up and make it exciting as I can. Okay? All right. But it also limits gross proceeds reporting required under section 6 blah, 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 to cash received and cash to be received, to in the existing regulations as consideration treated as cash by on behalf of the real estate seller in connection with the real estate transaction. As a result, these rules do not require the reporting of payments using digital assets made to real estate sellers in partial or full consideration for the sale of real estate, except to the extent that a digital asset falls within the definition of consideration treated as cash. Now, without becoming a student again and trying to get information out of this, I see a loophole there, folks, and maybe I'll cover that later. But it seems to encourage making real estate transactions with cryptocurrencies. But that's another matter, because I said I would cover also the Jobs Act. Moving on, first, we got these third-party settlement organizations. Okay, but you see here, it requires payment settlement entities to file information returns and furnish payee statements with respect to each participating payee to whom they have made one or more payments in settlement or reportable payment transactions. Payment settlement entities are merchant acquiring entities, which are banks, sorry for the phone busyness, or other organizations that are contractually obligated to make payments to participating payees in settlement of payment card transactions, and third-party settlement organizations. Third-party settlement organizations are central organizations that are contractually obligated to make payments to participating payees with respect to third-party network transactions for the purchase of goods or services sold, man, somebody's talking a lot, through a third-party network. That's basically using your crypto as money. And that's basically a third-party outfit that settles the transactions. You see, settlement entities. Isn't that what Ripple does? Isn't that what AMP does? Isn't that what XLM does? So you see how it applies. But I mentioned I would also talk about, let me see, there's another part here. This is it, right. I want to cover this before I go to the next part, because there's a minimus threshold. It says under the prior threshold, payments by third-party organizations to settle third-party network transactions were required to report only if the aggregate number of transactions with a payee exceeded $200 and the aggregate amount to report it with respect to those transactions exceeded $20,000. What did they drop it to make sure nobody gets out of it? Look at this. Under the ARP provisions, this proposal, they must report third-party network transactions with any participant pay that can exceed a minimum threshold of $600 in aggregate payments, regardless of the number of transactions. Wow. I'm going to turn my phone off. I'm also going to have to apologize for the noise for Bogey. I think I have it subsided, but anyone who's been with me for a while knows that I have a parrot that loves to make noise and dogs that love to bark. And I don't have a soundproof room, and I hope that if you were asleep, it woke you up, like the young lady in the image there. And if you were falling asleep on me, it still woke you up, like the young lady in the image there. Because on that real estate issue, I'm going to dig into that, but not on this video, because anyone who's been with me for a while, has listened to my rantings for a while, knows that I have been saying from the very beginning, crypto technology and blockchain is the wave of the future. Ride the wave. Precious metals and real estate are the places that I'll be looking for to preserve my funds. And I think this will be contributory to that. And maybe that's why the former President Trump is dealing so much in real estate. Quite honestly, it's a good way to move around and create new primary residences almost on a regular basis. But let's keep going. I want you to, if you like this video, share it, hit the thumbs up, and subscribe. Subscribe, man. Subscribe. I need subscribers because, like I said before in a prior video, I need motivation to keep doing this. I enjoy doing it, but I feel like YouTube is putting a thumb on me, so I need those of you who are my subscribers, and I appreciate the ones who are doing it because I got my report, and it shows that more and more people are sharing my videos. And I'm going to ask you, please continue sharing my videos. I'll do something in appreciation. Smile. Whenever I'm able. You can believe that. Moving on. And for the sake of time, we're only going to make it, looks like, to this page, and I'll cap out with another date-related comments before I close out this video. And maybe I'll do some more later as I continue to read this document and get information. But right now, I hope what I've read so far has proven helpful. But I promise to look at the Infrastructure and Investment and Jobs Act. Okay, and I said before that they're gonna come after your IRAs. But in any case, let's go here. This is on the 5th page, I believe, talking about the Jobs Act. You can see it here, the Infrastructure and Investment and Jobs Act. Okay, and it goes on to say here, where's it at? First, there it is. First, Infrastructure Act defines the definition of a broker. Okay. Second, the infrastructure modifies the definition of specified securities to explicitly include digital assets and to provide that these special securities are treated as covered securities for a purpose of basis reporting dates if they are acquired on or after January 1st of this year, 2023. You recall earlier I mentioned that it used to ask you if you own any cryptocurrencies. You said yes, and then you moved on. That went on for a few years. There was no requirements for reporting. But anything you did this year is different. Any buying you did this year is different. So for those of us who are early, pat yourselves on the back. Because, see, you bought them on or before January 1st, 2023. I should say we bought them. But any buying we've done since January is applicable here. Then it says third, Infrastructure Act defines a digital asset broadly to mean any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the secretary. You know, like your cold storage. I did a video about that. Maybe I'll plug it in here about they're coming after our cold storage. I made that comment in one of my videos. I just have to figure out which one. And fourth, it clarifies that transfer statement reporting applies to covered securities that are digital assets and also adds new information provisions to provide for brokers reporting on transfers of digital assets that are covered securities. provided the transfer is not a sale and is not an account maintained by a person that the broker knows or has reason to know is also a broker. So between themselves, they're excluded, and I told you they're churning anyway. But as we go on here, in this one, I have page 2, it says reasons for new information reporting rules for digital assets. Because they've grown in popularity as a payment method and an investment or trading assets. Continuing on, for the sake of time, I am going to move on to page 17. Let me get there, let me get there, let me get there, let me get there. I hope it's 17 for real, because sometimes it says 17, but it means 16. And we're going to look at info on column 2. All that reporting, folks, right here. Information to be reported for digital asset sales. Several new sub-paragraphs have been added to the rules in existing rules to address the information required to be reported with respect to digital asset sales. You are not going to make that money without them knowing it, and I said that earlier, and here is your proof. It says, for example, a rule requires that each digital asset sale for which a broker is required to file an information return, the broker must report on the form prescribed by the security the following information: the customer's name and address and tax identification, the name or type of digital assets sold and the number of units of the digital assets sold, the sale date and time, the gross proceeds of the sale, and any other information required by the form or instructions in the manner required by the forms or instructions. Additionally, to aid the IRS in verifying valuations provided for reported gross proceeds and in determining whether the claim basis by taxpayers in connection with a transaction for which an adjusted basis information is not reported also requires a broker report. So in other words, you ain't going to give them some bad numbers, because they'll check with the brokers and get the actual numbers on the day and time that you sold it. They are getting it under control. And like I've said, it covers so much information. I can't cover it all. I don't know how long this video is going to be. It looks like it's a 20 or 30-minute video. I'm going to wrap it up now because I also told you I'd talk about some dates. And you can see here when I go to page 41 under the applicable dates. Now, these are more timeline instances, but I'm going to also show you how I can rush up on you. It says here, the regulations regarding computation of gain or loss, the basis for digital assets under sections 1001 and 1012, which we cover 1012, are proposed to apply to taxable years for all sales and acquisitions of digital assets on or after January 1st of the calendar year immediately following the date of publication of a Treasury decision adopting these rules as final regulations in the Federal Registry. So if they finish it before the end of this year, it will apply to your tax returns next year. It goes on to say taxpayers, however, may rely on these proposed regulations for dispositions in taxable years ending on or after the day they filed this, August 29, 2023, provided the taxpayer consistently followed the proposed regulations under the sections in their entirety and in a consistent manner for all taxable years through the applicable dates of the final regulations. You can voluntarily know this information and follow the rules. If you don't voluntarily follow these rules, it doesn't look like you'll be in violation of anything in particular. However, remember, we've already seen that anything on or after January 1st of 2023, so you still need to consider reporting. But if they finish it before the end of this year and publish it in the Federal Register, it's a wrap, folks. It continues to give other dates. You can see here. It says here, in their entirety, blah, 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 blah. The proposed regulations require brokers to report gross proceeds from the sale of any assets effective on or after January 1, 2025. Don't get any false hopes. Remember what I just read before. Brokers are required to report the adjusted basis and character of any gain or loss with respect to a sale is effective on or after January 1st, 2026. So they're giving the brokers, and in this case, exchangers will be getting broker-dealer licenses and things of that nature, just like Coinbase. They're giving them plenty of time to get it together, but you can bet your bottom bippy, as a taxpayer, you need to get it together. But unfortunately, just like they did to Ripple and Larson and Garlinghouse, it almost sets it up for regulation by enforcement. In other words, if I wasn't sharing this information, would you know it? Now, you can guarantee that the HR Blocks and the Jackson Hewitts are going to know it, and they may tell you that. But I went to one of them one time, and I had to correct them. And from that point on, I started doing my own taxes because I had to correct them. They went and got the book, and they read it, and they said, "Oh, he's right," but their programmer hadn't put it in their program. Now, I'm not saying I'm better than them, but I'm saying that happened, and I ain't got to lie to you about it. So, but they'll have the information that we need. But my point is, you see the regulation by enforcement. You'll go in and they'll tell you the rules, but you don't know the rules. So you know, thank you, DK Will, for sharing some of these rules. You're welcome. Because if I go to page 52, and this is the end of it, folks, and I thank you for sticking it through with me through this. It's a lot, as you can see. It covers a lot of things, and I pulled out what I think is worthy of a conversation right now, highlighting the point. Applicability date is applicable to all acquisitions and dispositions. Of course, this is in regard to a specific part, but this is still the same spirit of it all. To all acquisitions and dispositions of digital assets on or after January 1st of the calendar year, immediately following the date of publication of final regulations in the Federal Registry. They already told you about January 1, 2023, so they got you covered. If they get this done, they got you covered in January of 2024, but they still have you covered anyway because of what they said about January 2023, because it said on or after. So they are wrapping it up so that no matter what, from this point forward, everybody's going to have to clean their nose and cross their T's and dot their I's and get it together. And it pays to know these rules. I'll try to cover it again based on the response I get from this video, because it's a lot, people. It's a lot. But I hope you've gleaned enough out of it, even if you went about washing your dishes or making your dinner or paying your bills while you listened, that you listened while I talked about it, and it helps you. Because this is DK Will Talk About It. And I've talked about it. Have a wonderful day.
Check the mic and make sure it sound right.